A tidal wave of capital is gathering on the horizon, and the epicenter of this financial upheaval is the cryptocurrency market. At the heart of this seismic shift stands Donald Trump, whose recent moves have set the stage for what many believe could be a $12 trillion tsunami of new money flowing into Bitcoin, Ethereum, and a constellation of promising altcoins. The next few minutes will break down the origins of this unprecedented surge, the catalysts driving it forward, and, most importantly, what you can do now to position yourself for the ride of a lifetime. The story begins with a historic pivot in U.S. crypto policy. In March 2025, President Trump signed an executive order establishing the Strategic Bitcoin Reserve. This initiative marked a watershed moment. The U.S. government would accumulate Bitcoin not through taxpayer dollars, but by seizing assets from criminal and civil forfeiture cases. Today, the U.S. holds roughly 200,000 BTC, valued at about $17.5 billion, treating it as a strategic store of value alongside gold. This move sent a clear message to global markets. Digital assets are no longer fringe experiments, but core components of national economic strategy. But the Strategic Bitcoin Reserve is just one piece of a much larger puzzle. The real tidal wave, the projected $12 trillion, is set to come from institutional capital. We're talking about the vast pools of wealth locked up in 401k retirement plans, pension funds, insurance portfolios, and the growing army of crypto exchange-traded funds, ETFs. Historically, these institutional giants have been kept at arm's length from cryptocurrency by regulatory uncertainty and a patchwork of state-level rules. That's changing fast. Two landmark pieces of legislation have paved the way: the Genius Act and the Clarity Act. The Genius Act, signed into law in July 2025, introduced a comprehensive regulatory framework for stablecoins, requiring them to be fully backed by U.S. dollars or other low-risk assets. This means that stablecoins, the backbone of crypto trading and DeFi, now have government-sanctioned transparency and consumer protections. Major players like Bank of America and Citigroup are already announcing their own dollar-backed stablecoins, signaling that the era of shadowy, unregulated digital dollars is coming to an end. The Clarity Act, meanwhile, has begun to recognize staking, tokenization, and blockchain-based financial products as legitimate investment vehicles, opening the floodgates for new financial products and services. These regulatory tailwinds are not just symbolic, they're catalytic. The Securities and Exchange Commission and U.S. Congress are rapidly moving toward full recognition of digital assets as part of the traditional financial system. This is ushering in the age of spot Bitcoin and Ethereum ETFs, which have already begun attracting billions in daily inflows from institutional investors. For the first time, retirement accounts, including 401k plans and pensions, are being granted direct access to invest in Bitcoin and Ethereum, unlocking trillions of dollars in previously untapped capital. This tidal wave of investment is colliding with another critical market dynamic: the supply squeeze. Exchange balances for Bitcoin and Ethereum are at historic lows, meaning fewer coins are available to meet the surging demand. As institutions rush to secure their share of this new asset class, the potential for a supply shock is real, and the price impact could be dramatic. So, what does this mean for the price of Bitcoin and Ethereum? If all these factors align, regulatory clarity, institutional inflows, and supply constraints, we could see Bitcoin surging past $200,000, shattering previous all-time highs. Ethereum, buoyed by ETF momentum, staking adoption, and explosive DeFi growth, could break through the $10,000 to $12,000 range. The excitement and speculation rival that of the 1999 dot-com boom, but this time, the fundamentals are far more robust. We're not just talking about hype and hope. We're seeing real adoption, real infrastructure, and real institutional buy-in. And the opportunity doesn't stop at Bitcoin and Ethereum. A select group of altcoins stand poised to benefit from this new era. Chainlink, Link, is becoming the backbone of data infrastructure for decentralized finance, with its price currently at $21.66. BNB, at $819.18, continues to expand its ecosystem for trading and DeFi applications. Ondo Finance is making waves by tokenizing U.S. Treasuries, bringing traditional fixed-income products on-chain. VeChain, VET, trading at $0.024, is seeing real-world adoption for supply chain management. And Cody, at $0.052, is focused on delivering Ethereum Layer 2 solutions with improved privacy, a hot topic as crypto matures. So how should investors position themselves amid this rapidly changing landscape? In the short term, vigilance is key. Monitor legal and regulatory changes, keep an eye on ETF approvals, and watch capital flows from institutions. These signals will give you a crucial edge in timing your moves. For the medium and long term, focus on the blue chips, Bitcoin and Ethereum, as well as key infrastructure altcoins that are essential to the crypto ecosystem. Risk management remains paramount. Diversify your portfolio, set sensible stop losses to protect your capital, and avoid the temptation of going all in on any single asset. The volatility can be breathtaking, and emotional decisions rarely pay off in the long run. As we stand on the brink of this $12 trillion wave, the choice is clear. You can either watch from the sidelines as history is made, or you can prepare, position yourself, and ride this momentum to new heights. This may truly be a once-in-a-lifetime opportunity to participate in the greatest wealth transfer of our generation. If you found this information valuable, take action now. Stay informed, subscribe for updates, and equip yourself with the knowledge to make smart moves as the market evolves. The next chapter in the crypto story is being written right now, and your decisions today could shape your financial future for decades to come. So, what do you think? Will Bitcoin lead the charge, or will Ethereum's innovation steal the spotlight? The wave is coming, and the time to act is now.